So what's the bull and bear case on Unity software? Let's get into this article, then we'll get into the analysis. So Unity software initially attracted a stampede of bulls when it went public at $52 back in 2020. The game engine developers stock opened at $75, eventually soared to a record high of $201 in November of 2021. But today, price finds itself at $31, below the IPO offering, as investors are disappointed with its slowing growth, lack of profits, and divisive business strategies. Alright, so the bulls love Unity because it's still a dominant game engine, its advertising business is stabilizing, its ecosystem is expanding into non-gaming markets. Unity also helps developers monetize their games with integrated ads, but that business suffered a major crisis last year after Apple's privacy change on iOS rendered its advertising algorithm obsolete. Nevertheless, it's been expanding its ecosystem beyond the traditional gaming market with its acquisition of Weta Digital, which created the special effects for Game of Thrones, new services for creating digital twins at real-world objects, and development tools for augmented reality and virtual reality apps. Now, here's the case for selling Unity. The bears think Unity is still a lemon because its organic growth has slowed to a crawl. Its stock looks expensive. It recently alienated a lot of its developers with an abrupt change to its fees, and insiders have been dumping a lot of shares. On a pro forma basis, which includes Iron Source, Unity expects its revenue to rise only 5% to 9% in 2023, compared to its 25% growth on a reported basis in 2022. That's also well below the original goal of generating more than 30% annual revenue growth over the long term. Lastly, Unity's insiders don't seem to be expecting a recovery. Over the past 3 months, they sold more than 4 times the number of shares they bought. The CEO also sold a lot of shares right before its runtime fee announcement. So the stock isn't cheap. Insiders are selling. It hasn't proven it will and can meet Wall Street's rosy expectations for 2024 and beyond. It looks like the bulls are got their backs up against the wall. Now, what about the charts, the technicals? Well, you have this huge resistance area, which was support at $70. You also have resistance below that at the $50 level. Going to the weekly chart, however, you do have this what appears to be a bottoming out process near the $25 level. You do had what we're going to call a leg up, which was short, ended at $50 again. That was resistance on the weekly chart. Now price has established a lower high, lower low, and another lower low. So short-term price is in a downtrend. Going to the daily chart, we can see all the moving averages are now above price. We can see the 200-day moving average serving as dynamic resistance. We see the next leg has started with its origins at $38 back in mid-September. Where's price heading to next? Well, if the bears case was in the court and if they won, price is heading back down to test near all-time lows at $25. Thanks for watching. Subscribe. Please like the video.